Hello everyone. Today, we are going to walk through the use cases and associated workflows of a multi-asset performance analyst on Aladdin. We'll start with an overview of the business functions of a performance analyst, then jump into some of the key concepts and methodologies they'll need to understand and how those are applied on Aladdin, and cover some key workflows they would perform on Aladdin. A performance analyst is most often responsible for generating analysis and reporting on a portfolio's historical performance, as well as attribution of that performance by various methodologies appropriate for the type of funds being analyzed. They may also then disseminate that information more broadly across PM, research, strategy, and risk teams to ensure all teams involved in the portfolio management process understand historical performance drivers. To perform their analysis and day-to-day workflows, performance analysts primarily leverage Explore, a one-stop shop for reporting and portfolio analysis. The first key concept to understand is how Aladdin handles the calculation of performance. Returns on Aladdin are calculated at the security level and aggregated to the sector, portfolio, and enterprise levels daily, then linked into multi-period returns via the standard compounding effect. Once calculated, performance can be displayed as one of three types of return: P&L, or dollar return, or P&L of the position versus market value of that position, or contribution, or P&L of the position versus market value of the fund. Returns at the security level are calculated based on accounting factors, such as price, income, paydown, FX, and so on. Looking at the first view we've created within Explore, we can see the decomposition of performance into these types of factors, starting with total P&L and going into the specific factors. First, we have price P&L, which measures the performance attributable to changes in valuation of each security in the portfolio. Next, we have income P&L, which is driven by either daily accruals, interest payments, or any sort of miscellaneous cash entries or corporate actions booked on the security, as well as interest payments if there are any deviations from expected payments based on accruals. Paydown P&L is another key component, which is based on receipt of principal based on changes in factor for instruments like structured product or other factorable bonds. FX P&L is due to changes in spot rate for non-base currency instruments in the portfolio. Finally, trade P&L is attributable to the difference between the intraday trade price versus the end price on the trade date. Summed together, these P&Ls equal the total P&L of the security. There are several methods and structures through which multi-asset investment workflows can be managed and represented on Aladdin, and thus there are different ways to view and account for performance on those strategies. There are three broad ways that multi-asset funds are typically represented within Aladdin: funds of funds, jacket sleeve, or direct holdings. In a funds of funds approach, investments are represented as fund-lined items into which an allocation is made. If position-level transparency is available, users can enable look-through functionality to break out the underlying holdings of each vehicle. When look-through is applied, users will see exposure to each of the assets in the underlying fund prorated based on the percentage allocation to each asset and the size of the position in the fund. In a jacket sleeve approach, investments are made into individual portfolios directly, which are organized into a top-level portfolio holding, the different sub-portfolios. Users can bucket portfolios together to create sectors. Finally, in a direct holding structure, investments are made directly into positions representing various asset classes in a single portfolio. These types of funds can be analyzed via a multi-asset breakdown applied to split out allocations according to how the funds are managed. Generally, the nuances behind multi-asset attribution comes in two forms: sectoring approaches and benchmarks. It is critical to ensure that the bucketing of allocations and investment decisions reflects the way in which the decisions are made, whether allocations are made into funds of funds, direct holdings, or portfolios themselves. Additionally, multi-asset attribution often incorporates a top-level strategic allocation benchmark against which allocation and selection decisions are evaluated, as well as an evaluation of the individual fund holding or portfolio's over or underperformance relative to its benchmark. The first broad workflow that a performance analyst might perform on Aladdin is the evaluation and assessment of performance. Once we've understood how our performance is calculated, we can then decompose it and seek to understand key drivers. In the multi-asset space, a decision-based framework is a primary approach. In the decision-based attribution framework, for multi-asset portfolios, we first evaluate the impact of any investment decisions made at the total portfolio level. For instance, the impact of FX allocations. These measures include FX, defined as return from the change in FX rates over the period, and FX carry, defined as return from the portfolio between the forward and spot FX rates. An additional component of portfolio performance that can be explicitly stated is manager selection, representing the outperformance of an underlying fund against its own benchmark. After stripping out the impact of these factors on performance, users are left with an excess return, which can be considered the piece of performance attributable to the investment decision process. Once we've determined how we'd like to define excess, we can then perform a further decomposition of this excess based on one of various Brinson methodologies. The approach is designed to answer the question of whether portfolio performance was due to sector allocation, or over-allocating to good sectors or under-allocating to bad sectors, or security selection, outperforming the benchmark within a sector. Within this analysis, users have control over a variety of settings, including excess methodology, where the multi-manager and balanced fund settings cover the use cases highlighted today, but other options are available. Calculation method controls what type of attribution decomposition is used to calculate sector allocation and security selection. Each model is a specific variety of the Brinson framework. Relative to controls how a good sector is determined, whether based on parent sector return or benchmark total return. Breakdown. Users can apply a variety of breakdowns to their performance attribution reporting, reflecting one or more layers of allocation decisions based on sector, country, currency, and many more types of decision points. In the multi-asset space, portfolio name is also a key component of bucketing schemas that can be leveraged. The breakdown used in attribution reporting should be in line with the process by which investment decisions are made. This analysis can be scaled to summary-level reporting across multiple portfolios at once and enhanced via time series analysis, launched from a right-click within Explore to provide daily transparency into performance and attribution results. The second key workflow a performance analyst might perform is fact sheet analysis, where we might want to look at a portfolio's track record over an extended period. With ex post analysis, we can examine the fund's performance over longer time periods, 1, 3, 5, 10 years or more, and understand how it's been managed relative to the benchmark. We can use statistical measures like tracking error, beta, information, and Sharpe ratios, and more to understand how tightly the fund has tracked the index period over period. Adding in upside or downside ratios and durations, as well as batting averages, can help us understand whether performance was due to sustained effects of consistent over or underperformance, or from smaller periods of large deviation. Our last and final workflow to cover today is exporting data for use in downstream report construction. Once we've built out our views, we can save them down for later reuse as an entire workspace or a template, or generate a URL to share this workspace with colleagues. Finally, you can export everything to Excel or PDF via the drop-down button for easy downstream use, as well as construct a batch report to enable scalable exporting of a variety of analyses across portfolios with a single click. In conclusion, we've covered workflows around performance information, attribution reporting, and ex post statistical analysis. Further information on Explore, the tool in which this demo was conducted, can be found in our user guide or in recorded sessions available on Aladdin client sites.